Welcome to part 2 of our 403B Insight videos. In this video, we will be addressing the 403B withdrawal rules, 403B contribution limits, and what a Roth 403B consists of. Withdrawals from your 403B account will be taxed as regular income at the federal level. Some states treat it as regular income, while in some states, all or part of it is exempt, and some states don't tax income at all. 403B accounts come with rules restricting when you can withdraw funds. This means that they're not a good place to stash your emergency funds or, for that matter, any money that you think you'll need before retirement. With certain exceptions, taking distributions from your 403B before you hit age 59 and a half will cost you a 10% penalty. What are those exceptions? If you separate from your employer, you can roll over the funds in your 403B. If you die, your beneficiary can access your contributions. If you encounter financial hardship, you may be able to make a withdrawal. In this case, you may only access selective deferrals taken from your pay, not contributions made by your employer. If you are in the reserves and get called up, you may be eligible for what's called a qualified reservist distribution. If you become disabled, you can make a withdrawal. Now here are the 403B contribution limits. For 2019, IRS contribution limits on 403B contributions are as follows. For an employee's elective salary deferrals, the limit is $19,000. For total contributions, including salary deferrals and employer matching, the limit is the lesser of either $55,000 or 100% of employee compensation. Employees aged 50 years old or over can make catch-up contributions of up to $6,000 on top of the regular limit. Have you ever heard of a Roth 403B? A Roth 403B has similar attributes to the Roth IRA. You fund it with after-tax dollars, which means you don't lower your taxable income, but the upside is that you don't pay taxes on the money that you withdraw in retirement. Not everyone who has the option to contribute to a 403B has the option to choose a Roth 403B. If you do have the choice between a regular and a Roth 403B, how do you choose? As with the IRA versus Roth IRA debate, it's a question of your tax bracket. If you think your tax bracket is higher now than it will be in retirement, it pays to save for retirement with pre-tax dollars. That means taking advantage of a regular 403B. By doing so, you're reducing your taxable income, which means you may owe less to Uncle Sam this year. If, on the other hand, you think your income and tax bracket will be higher in retirement, you should probably go for a Roth 403B. You'll reduce the tax burden you'll face in your post-work years. You also won't pay taxes on the, possibly substantial, growth of your investments. Thank you for joining us for this short video, and remember to join us in part 2 for continued education on 403Bs. For more information, or to better understand what your retirement plan could look like, take the questionnaire linked in the video description.